on business in Africa. We've already had 3 lectures in the series, and this is the 4th one. And this is very special to us because it's the first time we are having a woman mounting the platform, going to speak to us on microfinance. Without much ado, I want to invite the director of the Institute, Professor Akosi Adomako Ampofo, to formally welcome us and also introduce the chairperson. Thank you. Let's be clapping.
Vice Chancellor for Academic and Student Affairs, Professor Professor Jacob U. Gordon, the Kwame Nkrumah Chair in African Studies, Mr. Fred Atakuma, Vice President Sustainability at Anglogold Ashanti, Mr. Kwame Adokufo, Vice President for Corporate Affairs, Ashanti and Anglogold Ashanti, our distinguished speaker, Mrs. Akwa, and some chiefs and queen mothers from Owase and Takwa, I will list here. Nana Opong Fema, the second paramount chief and president of Kaja Traditional Council, Nana Olusuano, Obahema Adoma, Nana Bana One Adwa the second, the queen mother of Wasaf Fiasi Traditional Council, Nana Epia Buna the first, the queen mother of Isuyaso Divisional School, Nana Kojo Bina the second, the chief of Tebrebie, Nana Kwesi Atubra the second, Isuyaso Hene of Isuyaso Divisional School, Nana Chimbo the second, Jase Hene of the Pintu Divisional School. Ladies and gentlemen, colleagues, senior and junior members of the university, members of the press, Akwaba to all of you. It gives me a lot of pleasure on behalf of the Institute of African Studies to welcome you to the 4th in this Anglogold Business in Africa series of lectures. And I'm particularly pleased, as the MC has already said, that this evening's speaker is a woman. I only met her this evening, but she came very highly recommended as an astute manager who could turn entities around and as a person of integrity. And both of these qualifications, I think, qualify her highly. I am sure she has many other fine attributes, but these 2 really persuaded us. Mr. Pro-Vice Chancellor and Chairman, before I make a few remarks on the import of today's event, I should like to thank the staff and colleagues of the Institute of African Studies for putting this program together again. As many of you may know, we are celebrating our 50th anniversary, and our timetable is pretty tight and packed, and the table strike continues, so it doesn't make things particularly smooth to get shows on the road. So I'm grateful for the support that we have had. The Anglogold Ashanti Lectures on Business in Africa are a platform to highlight not only the diversity, resilience, and innovation in African businesses in Africa, but they also provide us in the academy an opportunity to engage with industry and other persons with knowledge about the business of business in Africa. Hence, we are provided an opportunity to interrogate the synergies between ideas and practice. The philosophy behind the lectures was to highlight prominent business efforts and business persons in Africa, as well as to reveal the multiple ways in which businesses shape and are shaped by our socio-political development. Newcomers to this lecture series may need some edification on our relationship with Anglogold Ashanti. In Marrying Town and Gown, we seek an intellectual project that speaks to a core objective for setting up this institute, namely, in the words of our first president, Kwame Nkrumah, the formal opening of the institute in 1963, and I quote, "to make a specific contribution to the advancement of knowledge about the peoples and cultures of Africa," unquote. The state of business in Africa today suggests that African markets are vibrant, among the fastest growing, and yet bedeviled by a multitude of structural and social barriers. And who better to explore and unearth these synergies than researchers in the social sciences and the arts? As scholars in the areas of societies and cultures, language, literature and drama, religion and philosophy, music and dance, history and politics, and media and visual arts, we are acutely aware of the multiple ways in which businesses touch what we do. Our teaching of one of the University of Ghana's 5 required undergraduate courses, Introduction to African Studies, also provides us with an opportunity to engage with students on the links between local and global businesses and Africa's identity within current geopolitics. Thus, we are not just researchers and teachers, but also advocates for the African business enterprise. Mr. Chairman, before I take my seat shortly, permit me to mention another aspect of our collaboration with Anglogold Ashanti, namely their support of our Kwame Nkrumah Chair in African Studies, the first endowed chair at the University of Ghana, and a very successful chair, if I may say so, on behalf of the Institute, whose first 2 occupants, Professor Kofi Anidoho and Emeritus Professor Jacob U. Gordon, who is upstage here with us, have been most effective and have done us proud. The chair was established to honor Nkrumah for his significant intellectual contributions to African thought and for his vision and commitment to the liberation and development of Africans on the continent and in the diaspora. It also seeks to promote research, teaching, and the public promotion of Africana studies. This endowed chair received most of its core funding from Anglogold Ashanti and was formally launched on Friday, September 21st, 2007. We remain grateful to Anglogold. Anglogold themselves will tell us, giving them a few minutes to come and take the stage and do a little PR for their organization. But we do know that they have been a successful business entity on the continent and have been listed on stock exchanges both on the continent and in other parts of the world. They have been very effective in malaria control work in the communities where they are working, and we had the opportunity to go to Obuasi ourselves a couple of years ago to see the social work that goes on in at least one of the mining communities where they work. And I have to say that we had to concede that we were quite impressed with what we saw. The company continues to play its part in the development of the financial markets in the country, and it may be fair to say that Ashanti Gold is still dominant in the entire market capitalization of the Ghana Stock Exchange, now a leading exchange in Africa. On that note, ladies and gentlemen, let me say once again, Afaba, and thank you very much for coming. I'm not allowed to take my seat yet, yes. The reason why I have been in such haste to take my seat is that the chairperson for today's occasion, Professor Osam, threatened that he did not want a lengthy introduction of himself, and I was simply to indicate that he is Pro-Vice Chancellor for Academic and Student Affairs and that he is Professor of Linguistics. So I have been faithful to his instructions, and I introduce our chair to you, ladies and gentlemen. Please join me in welcoming
Greetings from the Vice Chancellor, who is currently out of the country. He definitely would have loved to be at this meeting and to chair it, especially because of his specialty as an economist. I'm only a miserable linguist. Not the type they come along with, but I'm a linguist of another time. So today we have gathered to listen to another lecture in the Institute of African Studies and Anglogold Ashanti series. And today our speaker is Mrs. Felicity Aqua. And she holds an executive master's degree in business administration. She also has an MBA in finance and a BA in economics and law, as well as a postgraduate diploma in project appraisal and management. Now, because the profile is already in the brochure, I'm not going to read the whole thing, except to say that she has invested over 30 years of her life in the banking business, as well as in business development. And she has held various positions in these industries. She also has played a very pioneering role in entrepreneurship and business development, not just in Ghana, but in other places across the continent. She has had, or she's won various awards, and all of these are listed, but let me mention that she was adjudged the Marketing Woman of the Year in 2006 by the Chartered Institute of Marketing Ghana. She's also a fellow of the Chartered Institute of Bankers. She serves or has served on various boards, and these include the board for the Food Research Institute, the Gold Coast Securities, the Metropolitan and Allied Bank, and many others. And the portion that is of interest to me is that she currently serves on the board of one of our affiliate institutions, CIBT, the Catholic Institute of Business and Technology. And she is also the Vice President of the Business Council of Africa. Ladies and gentlemen, this is our speaker. Shall we welcome her to the Institute of African Studies?
And before we have the separate appellation, we'll take a message from Anglogold Ashanti, Ghana. And the person to do this is Mr. Fred Atakuma. He is the Vice President, Sustainability. Shall we welcome him?
Good evening, everyone. Professor Tekuros, I'm Vice Chancellor of the University of Ghana, and Chairman for Education. Professor Kosuya Dumako Ampof, Director of the Institute of African Studies. Professor Emeritus Jacob Gordon, occupant of the Kwame Nkrumah Chair. Mrs. Felicity Akwa, former Chief Executive Officer of the Exit Guarantee Company Limited, and our speaker for tonight. And I know heads of departments and faculty members, distinguished invited guests, friends from the media, colleagues from Anglogold Ashanti, ladies and gentlemen. Today marks the fourth in the series of Anglogold Ashanti's Business in Africa lectures, and on behalf of the board, management and staff of our company, and also in partnership with our friends of the Institute of African Studies, I would like to welcome you all to this important event. Let me also take advantage of this opportunity to congratulate the Institute on its Golden Jubilee anniversary and to wish her well in the days ahead. We are indeed very proud of our association with the Business in Africa lectures and the Kwame Nkrumah Chair for that matter, as it has proven to be a platform for discussing groundbreaking and innovative business ideas and practices that seek to radically transform the African situation for the benefit of us all. Kwame Nkrumah's vision of economic independence for Ghana and the entire African continent is one that we in Anglogold Ashanti subscribe to. And to this end, we will continue to support the Institute of African Studies as it conducts research on the works and leadership of this great son of our land. Anglogold Ashanti initially provided $400,000 towards the Kwame Nkrumah Chair when it was launched in 2007, and continues to fund the annual lectures on business in Africa. Discourses on various aspects of the African business situation have since been delivered by leading business figures such as Bobby Godsell, a former Chief Executive Officer of Anglogold Ashanti, who delivered the inaugural lecture, Mark Kutifani, another former Chief Executive Officer of Anglogold Ashanti, our very own Dr. Tony Otenjesi, former Chairman of the University of Ghana's Council, and Tito Mboweni, former Governor of the Reserve Bank of South Africa and Chairman of Anglogold Ashanti. This year's lecture lifts the bar yet again, since it will be delivered by a great daughter of our land, as she tackles the subject of microfinance, which holds the promise of transforming the economic and financial situation of our numerous masses, and allowing particularly the poor and marginalized better access to finance and deeper involvement in the economic social times. The subject of microfinance is of particular importance to us in Anglogold Ashanti because a year ago we launched 2 community trust funds at Obuasi and Idua Premiertakwa respectively, which were tasked with the mandate of supporting community and economic development within our catchment areas. On the community development front, these funds have started making important inroads by providing much needed support to public, basic and senior high schools within our catchment areas. Specifically, 12 15-seater fully air-conditioned Toyota minibuses and 140 desktop computers were donated to schools last year. And the focus this year has been on providing educational infrastructure as well as investments in water and sanitation facilities for the benefit of our stakeholders. Within the economic development component of funding by these community trust funds, however, is the unique opportunity to deploy microfinance as a critical intervention. So tabletop sellers of provision on our street corners, vegetable sellers in our markets, women's groups producing much needed palm kernel oil and locally manufactured soap, among many others, who traditionally have little or no access to formal banking institutions, can now have permanent access to the credit they desperately require to grow their businesses to the next level. Such interventions put them in better stead to provide for the needs of their families, especially as it relates to the education and health of their children, who are the leaders of tomorrow and require the support to achieve their potential. Anglogold Lecture is in effect excited about this topic, and like the distinguished audience with us this evening, we look forward to gleaning critical lessons that policymakers, business leaders, financial institutions, and all players in our African economies can implement to the benefit of our dear continent and its people. On this note, we would like to express our gratitude to the Institute once again for their partnership and to wish you all an enjoyable and enlightening evening. Thank you very much.
African studies. Hey, dinner order. So when that's Sania, Manka, or retirement, or retire. I don't mean and share be a senior. On Sunday, I'm panning fire and say, I swear, or sign up that apartment, Kroma. I'm your tea and can do. I swear, a gentleman did you mind? Said I am your mamma, and you until you are. I'm the one to say, I'm planning for your casa. I am Shabia. I am bedroom casa, every beer. I can't imagine me. You have been doing one. I pay Quampa. The Baba saw a Babua. I mean, Chimanso. And that year. I don't think you have a share until made in come on in a pub. akonya akunini ani tramoni ahia sabre asuafo amoa ama ne memai adwafo no nyina kwaba sa abra no so se ye be mu kasa kira aya ne ehia woni pabia wo suo mu woni pabia woni midie woni pabia woni kasa abra fatras ayi mua oba nwe nyamfo bi nyansaka no I'm 10 minutes on to the summer. I want to say ofan kwa na wo bia ba de mo kasa kire ya wono no oba wodi kan ya yafra no nai mami wo aye Felicity akwa mami mo akwa pa oba mi yamfo e oba ni mi de wo wudio mi di simple Akasashana musamema na mejutata mejutata muabe kasa umeona kenteni atu nsafra wo na mimi na kasa sepewe fefe wo obani mi diafo obapa mamuswe
Thank you so much. Good evening. Please allow me first to thank the previous speakers, the director of the Institute, the Pro-Vice Chancellor, and the director of Anglogold, Mr. Takuma, and of course, Mr. Crunchy, who have all given kind qualifications on my persona. I am very grateful. Mr. Chairman, Honorable Ministers of State and Members of Parliament, Pro-Vice Chancellor, Professor Sam, Your Excellencies, members of the Diplomatic Corps, Professor Gordon, Chair of the African Studies Chair, Directors and Chief Executive of Anglogold Ashanti, Captains of Industry present here, distinguished faculty of the Institute of African Studies, Nananom, Nime, distinguished academia of the University of Ghana, my colleague bankers and practitioners in the microfinance industry, members of the press corps, ladies and gentlemen. I deem myself most privileged to be here amongst this august audience to deliver the 2013 Anglogold Ashanti Lecture on Business in Africa. I wish first of all to thank the Institute for extending such an invitation to me. In fact, when the invitation came, I was out of the country, and in my excitement, I responded yes. It was only when I came back that I was wondering why I responded yes. But God is great. I have managed over the past 3 weeks to try and put something together, which I hope will be acceptable to you all. Mr. Chairman, the statement that the magnitude of the changes taking place in Africa today is a positive index of the scale and pace necessary for our social reconstruction, made by Dr. Kwame Nkrumah in his speech delivered at the opening of the Institute of African Studies on the 25th of October 1963, is true today as it was then in the early 1960s. My presentation will be a slight departure from previous speakers, since I intend to cover this topic mainly from the practitioner's perspective. This topic, which is microfinance, its evolution and impact on the economic development and growth of emerging economies over the past 3 decades, lessons for Ghana and Africa, considers also to some extent the societal characteristics in Africa which promotes microfinance. Due to the existence of the large informal sector in Africa, it is important for all African countries to pay attention to defining and structuring the informal sector, which has a direct correlation to the success of any microfinance program installed by governments of emerging economies. Microfinance is generally defined as the practice of granting small loans to entrepreneurs who would not ordinarily qualify for conventional bank loans. Other experts, however, stipulate that microfinance means a lot of different things depending on where in the world you are and what type of industry you are in. Section 46 of the Non-Bank Financial Institutions Act 2008, Act 774, defines microfinance services as financial services provided by institutions, however organized, whether as companies limited by liability or unlimited, non-governmental organizations, cooperatives or cooperative societies, rotating savings and credit associations or groups, common bond institutions, self-help groups, or associations promoting self-help groups, providing loans not exceeding an amount determined by the bank to a single borrower, whether directly to borrowers, contributors, or members, or through intermediaries, and whether accepting deposits from members or not. In fact, I've never come across such a long definition of microfinance. But of course, it's coming from our central bank. So be it. Globally, microfinance initiatives are aimed at breaking a cycle of poverty in emerging economies. It can, for instance, allow a woman who works in a textile mill start and scale her own small business. Domestically, microfinance initiatives often serve minority, as was said by the director of the Anglogold company, and low-income communities to operate their own small businesses. The microfinance system was generally recognized by the world when economic players assessed its effectiveness through the Grameen Bank, which was initiated by Professor Mohammed Yunus in 1976. As a professor at the University of Chittagong, Bangladesh, he launched a research project to examine the possibility of developing a credit delivery system to provide banking services targeted to the rural poor. In October 1983, the Grameen Bank project was transformed into an independent bank by government legislation. The key objectives were to extend banking facilities to poor men and women, eliminate the exploitation of the poor by moneylenders, create opportunities for self-employment for the vast majority of unemployed without providing collateral securities,
bring the disadvantaged, mostly the women from the poorest households, within the fold of an organizational format, which they could understand and manage by themselves, and also to reverse the age-old vicious cycle of low income, low savings, low investment into a virtuous cycle of low income, injection of credit, investment, more income, more savings. Today, Grameen Bank is owned by the rural poor, whom it serves. Borrowers of the bank own 90% of its shares, whilst the remaining 10% is owned by the government through a Bangladeshi government ordinance of October 2, 1983. Bankers Ron Wiswinski and Mary Hilton of Shore Bank, a community bank in Chicago, USA, helped Yunus with the official incorporation under a grant from the Ford Foundation. By the beginning of 2005, the bank had loaned over $4.7 billion, and by the end of 2008, $7.6 billion had been loaned to the poor through its branches, numbering over 2,100 in the country. The bank's success inspired similar projects in more than 40 countries around the world. In Africa, microfinance companies have grown over the last 3 decades in almost every country in mainly East Africa, West Africa, and Southern Africa. It is well known that the Grameen Bank is based on the voluntary formation of small groups, initially of 5 people, to provide mutual, morally binding group guarantees in lieu of the collateral often required by conventional banks. At first, only 2 members of the group are allowed to apply for a loan, and depending on their performance in repayment, the next 2 borrowers could apply, and subsequently the 5th member as well. The assumption is that if individual borrowers are given access to credit, they will be able to identify and engage in viable income-generating activities in simple processing such as rice husking, fruit juice making, pottery, weaving, garments, sewing, storage, marketing, and transport services. Women were initially given equal access to the schemes, and they proved to be reliable borrowers and astute entrepreneurs. The operations of the bank are carried out by so-called bicycle bankers in branch units with considerable delegated authority. The rigorous selection of borrowers and their projects by the bank workers, the powerful peer pressure exerted on these individuals by the groups, and the structured repayment scheme contributed to the success of Grameen. Under the scheme also, there is provision for 5% of loans to be credited to the group fund as savings. The success of this approach shows that a number of objections to the poor having access to loans can be overcome if careful supervision and management are provided. For example, it had earlier been thought that the poor would not be able to ever find remunerative occupations. It was felt that the poor would not be able to repay loans. In fact, repayment rates reached 97%. It was considered that poor rural women in particular were not bankable. In fact, they accounted for 94% of borrowers in the early 90s. It was thought that the poor could not save. Contrary to this widely held view, savings by such clientele grew to a large extent at the same time. In fact, group savings have proven as successful as group lending, and other innovative approaches such as direct targeting, screening out bad clients through group organizing, ensuring repayment, and reducing costs all contributed to the success of Grameen. It was further thought that rural power structures would make sure that such a bank would fail. However, the Grameen Bank has been able to expand rapidly. Indeed, from fewer than 15,000 borrowers in 1980
The number of branches in operation was 1,128 with 2.34 million members. 2.24 million of them being women in 38,957 villages. By the way, Bangladesh, I don't know if you know the population. The population is around 150 million, and the area coverage of the country is almost the same as Ghana's, but the people number 150 million. There were 66,581 centers of groups, of which 33,126 were women. Group savings had reached US dollars 160 million, out of which $150 million were saved by women. There are many overlapping explanations why the Grameen model worked. Some people have attributed the success to a number of factors, such as the making of a product that met client needs, development of relatively low-cost delivery mechanisms, and 3, generation of resources that allow survival and expansion. The findings from Holm and Mosley, 1996, and Jane and Moore, 2003, provide other attributes for the success, namely administrative efficiency, working with groups, transferring transaction costs to clients, and standardized products and procedures. It is worth noting that the Grameen also has its critics. According to a publication by the Global Poverty Research Group, not everyone in Bangladesh and beyond is happy with the microfinance paradigm. In some cases, the microfinance approach to poverty alleviation has been criticized in terms of its focus on the market and poor people's financial liquidity, rather than on the socio-economic structures that underlie poverty. Others note that the very success of microfinance as an industry is based on its failure to challenge the foundations of the class structure, and that the home-based, self-employed, often emphasized by MFIs, that is the microfinance institutions, limit the potential for people to escape poverty and marginalization. Nevertheless, most of the critics nowadays focus on moving the models forward and not discrediting the approach in general. It is noteworthy that some of the objectives for the setup of the Grameen Bank currently apply to Ghana and other African countries. It is generally accepted that the microfinance boom in Asia and Africa has arisen out of the old communal lifestyle of lending monies from family members to operate micro businesses. This development has resulted in susu collecting companies, savings and loans companies, credit unions, and financial non-government organizations. Evolution of microfinance in Ghana. Mr. Chairman, the concept of microfinance is not new in Ghana. Traditionally, people have saved with and taken small loans from individuals and groups within the context of self-help to start businesses or farming ventures. In fact, only recently a nephew of mine came to me wanting to set up a barber shop and needed 500 Ghanas. Give me the upper limit as the 500 Ghanas. Available evidence also suggests that the first credit union in Africa was established in northern Ghana in 1955 by Canadian Catholic missionaries, according to the Ghana's Ministry of Finance and Economic Planning. Susu, which is one methodology of microfinance, is also thought to have originated in Nigeria and spread to Ghana in the early 1990s. In line with global trends, microfinance in Ghana has evolved through 4 distinct phases, and these are as follows. Phase 1 involved the provision of subsidized credit by government starting in the 1950s, when it was assumed that the lack of money was the ultimate hindrance to the elimination of poverty. I think those of you who were then adults, 1950, will remember. Phase 2 comprised the provision of microcredits, mainly through non-governmental organizations to the poor in the 1960s and 1970s. During this period, sustainability and financial self-sufficiency were still not considered important. Phase 3 involved the commencement of formalizing the microfinance institutions in the 1990s. Phase 4 covers the mainstreaming of microfinance and its institutions into the financial services sector since the mid-1990s. The MFIs have consequently gained importance and visibility. In Ghana, microfinance is seen as encompassing the provision of financial services and the management of small amounts of money through a range of products and a system of intermediary functions that are targeted at low-income clients. The sector comprises formal suppliers such as savings and loans, rural and community banks, as well as some development and commercial banks. Secondly, semi-formal suppliers such as credit unions, financial non-governmental organizations, and cooperatives. Thirdly, informal suppliers such as susu collectors and clubs, rotating and accumulating savings and credit associations, money lenders, and other individuals. And fourthly, public sector programs that have developed financial and non-financial services for their targeted clients. With time, microfinance in Ghana is practiced through certain registered unions and associations, such as the Ghana Cooperative Credit Unions, Ghana Cooperative Susu Collectors Association, Association of Financial NGOs, Ghana Association of Microfinance Institutions, ARB Apex Bank, and other donor-supported microfinance projects. Johnson Esiama and Victor Say of the Bank of Ghana in 2007 argued in their publication Note on Microfinance that microfinance can make significant contributions through several channels when properly harnessed. It can promote higher investment for economic empowerment, which in turn will promote confidence and self-esteem, particularly for the vulnerable. They recommend that efforts must be geared towards the improvement of the institutional capacity as well as the regulatory framework of the microfinance sector in Ghana. The Central Bank of Ghana has recognized the major impact of microfinance on the economy by providing for its operations under the Non-Bank Financial Institutions Act 2008, Act 774. Currently, there are over 228 licensed institutions contributing a capital of just over 407 billion Ghana cedi. The Ghana Association of Microfinance Institutions, however, estimates that there could be over 1,000 entities in the system. That is about 700 unlicensed also operating. The Secretary of the Association of Microfinance Institutions, Maxwell Adombila Akalare, stated in a recent article that a cumulative sum of 940.17 million Ghana cedi worth of deposits has been mobilized by 180 microfinance institutions. Most central banks in the world have evolved regulatory systems to control the operations of MFIs. In Ghana, such non-bank institutions have been categorized into 4 tiers. Tier 1, which requires a minimum capital of 7 million, mostly found with rural banks, finance houses, savings and loans companies. Tier 2, which requires that the paid-up capital should be at least 100,000. This has now been recently reviewed
to 500,000 in the next 2 years, to be fulfilled by the end of the next 2 years, in order to contain the level of economic growth in the country. The units are also allowed to take deposits. Tier 3 consists of money lenders who are allowed to keep a minimum capital of 60,000 Ghana cedi, and Tier 4 consists of the Susu collecting companies who do not have any minimum paid up capital requirement, but can take daily contributions and are required to do formal registration of the groups, and also contribute to an insurance fund to be set up by the groups or associations. The demand for microfinance services all over the world has been on the increase and is greatly impacting on the creation and growth of micro and small businesses. The consistent growth in size and numbers of microfinance institutions clearly exposes the inability of commercial banks to satisfy the loan and credit requirements of most small businesses and individuals. The case of Women's World Bank in Ghana. Mr. Chairman, the history of Women's World Bank in Ghana shows the important role Ghanaian women played in the evolution of MFIs in Ghana in particular. I hereby take this opportunity to recognize the invaluable contributions made by Professor Florence Dolphine, who chaired the council for over 6 years, Mrs. Ellen Arthur, Mrs. Dora Gordon, and Mrs. Engman. I had the privilege of working with the group between 1999 and 2002. And I wish to join my former colleague, chief executive officers of WWBG, namely Madam Abakwenu Amabiana and the current CEO, Mrs. Adjoana, to pay tribute to the founding members for their foresight and the brilliant work done. Women's World Banking Network was established after the UN International Women's Conference held in Mexico City in 1975. During which two eminent Ghanaians, namely the late Dr. Mrs. Esther Oklu and the late Justice Mrs. Annie Jagi, the Supreme Court judge, presented a paper on the empowerment of women globally, which was accepted. As a follow-up to the conference, Stitching to Promote Women's World Banking was established in the Netherlands in 1978. I take this opportunity to also specially recognize their immense efforts in setting up Ghana's affiliate of the Women's World Banking International. In Ghana, WWBG, as it's now called, was originally registered as an NGO in 1983. Its shareholders originally consisted of 116 individuals and groups, such as the Presbyterian Women's Fellowship, Vegetable Sellers Association of Greater Accra Region, Greater Accra Federation of Business and Professional Business Women Association, Apa Futoji Association, and Women World Banking International. 80% of the shareholders were women and 20% were men. I say it's good for the men now. 80% for the women. WWBG became operational in 1988, provided access to credit through guarantee schemes to micro entrepreneurs, primarily women. It also provided training in business and financial management. Its main aim since inception was to empower and enhance the advancement of women in micro and small-scale enterprises through the provision of savings and credit facilities, training and other technical services, as well as advisory support services. WWBG subsequently incorporated a solely owned subsidiary company called Women's World Banking Ghana Mutual Assistance Susu Limited, under the then Non-Bank Financial Institution Act 328. The main objective of this subsidiary was to handle its savings mobilization and lending operations, patterned after the traditional susu, it became a leader in the market. The features of the micro-banking of Women's World Banking of Ghana carry the expected objectives of the original stitching to promote Women's World Banking, with a head office in New York, to target at least 70% of the total client portfolio as women. 2, engage in mobile banking by moving to clients in the markets, marketplaces, transport stations, etc. 3, collect family statistics on client savers and borrowers, the type of houses they are living in, the number of children they have, the educational status, the kind of food content consumed, and also conduct periodic survey to establish changes in the standard of living and growth in business. Besides the 4, they were expected to conduct workshops and training for customers to appreciate basic bookkeeping for their businesses, develop marketing concepts and product development modules. Mr. Chairman, it is worth noting that the shareholding structure of WWPG has changed over the years to include other institutions, individuals, and an international microfunding organization. Because now it's converted and transformed into a savings and loans company supervised by the central bank under the NBFI Act 2008, Act 774. However, the link to some of the benchmarks set by WWP International has not been lost. And these include, among others, again, to make sure that at least 70% of its clients are still expected to be women. Its key products cover working capital, insurance, education, health, acquisition of consumer goods such as household items, transport services, and others. Its loan portfolio has increased from 583,000 Ghana cedi in 2005 to 17 million Ghana cedi to date. Deposits have increased from 2 million Ghana cedi in 2005 to 13 million Ghana cedi as at August 2013. Active clients have increased from 59,180 in 2007 to 84,000 in 2013. Interest rate charges vary from 1.5% to 5% per month, depending on the products subscribed. Some benefits from microfinance. Some of the benefits obtainable from microfinance are as listed, and as I mentioned. Firstly, the provision of microfinance empowers individuals to engage in viable income-generating activities. No matter how small, the person can get the basic food and shelter for the day. Women operating such microfinance businesses have lessened their dependency on their husbands and raised their status. These women have also improved the nutritional status of their children. Over the last 2 decades, the microfinance industry has been able to come to a broad consensus on the best practices for increasing outreach to women clients, especially with respect to credit activities. This has resulted in significant progress in terms of women's access to credit. So access to credit has improved tremendously for women. Employment levels generally increase, especially in the informal sector, irrespective of gender. Savings has been encouraged and repayment rates improve over time through close supervision. The development of umbrella associations has given rise to the provision of educational programs for clients of such microfinance institutions and the institutions themselves. In the situation of Grameen Bank, for example, the average household income of the members is about 50% higher than others. This has resulted in a sharp reduction in the number of the bank clients living below the poverty line. Generally, there has been a discernible shift from agricultural wage labor to self-employment. Such a shift in occupational patterns has an indirect positive effect on the employment and wages of other agricultural wage laborers. Over the past 3 decades, some individuals, mainly in the informal sector, engaged in micro businesses, have tripled turnovers, quality of housing has improved, many more children have had access to education, and women have been empowered with the provision of capital to sustain their businesses. Development efforts of respective governments are intermediated to the rural and communal centers through the practices of microfinance institutions. In some well-acclaimed institutions in Kenya, Malawi, Nigeria, and Bangladesh, systems on intensive discipline, supervision, and servicing characterize the operations of credible microfinance institutions, resulting in operational viability and growth in the economy. Rigorous selection of borrowers and projects, the powerful peer pressure exerted on the individuals by the groups, and the repayment scheme, often based on weekly installments, contribute to operational viability to the microfinance sector. Challenges to the microfinance industry. Global challenges. 8 notable challenges, among others, confront the industry presently. Namely, many emerging economies face the challenge on inadequacy in availability of strong regulatory and monitoring regimes to protect deposits of clients. 2, the largest beneficiary groups emanate from the informal sector, which exhibit high defaulting tendencies, resulting in loss of capital, and also its characteristics have not been well defined and applied. 3, there is the prevalence of high interest rates charges by most microfinance institutions. 4, inadequate screening of new entries of unskilled operators that endanger welfare of clients. 5, the inability to establish the extent of growth in the informal sector and also establish the differential improvement over time in entrepreneurial activities within the sector to transform survivalist micro-enterprises into entrepreneurial micro and small businesses capable of self-propelling themselves into larger, better managed and competitive businesses in the formal sector. It's also a challenge. Some finance companies licensed as microfinance bodies rather operate as quasi-banks, accepting collateral. Inappropriate approaches to microfinance delivery, inadequate enforcement of the business rules and regulations specified under the Bank of Ghana Notice, BG GOV SEC 2011-04, and an absence of a formal MFI coordinating institution for all micro groups and finance institutions in the country. Under the first point, inadequate policy guidelines for the subsector. In fact, between 1950s and the 1980s, the subsector operated without specific policy guidelines and goals, and this partially accounted for the slow growth of the subsector and the apparent lack of direction, fragmentation, and lack of coordination. According to Bank of Ghana, the constraints facing the subsector included inappropriate institutional arrangements, inadequate capacities, lack of coordination and collaboration, poor institutional linkages, inadequate skills and professionalism, and inadequate capital. This state of affairs has, however, improved tremendously over the past 5 to 10 years. The second challenge is the inappropriate approaches to microfinance delivery.
The traditional and commercial banking approaches to microfinance delivery often do not work. According to traditional commercial banking principles, the loan credit methodology requires documentary evidence, long-standing bank-customer relationship, and collateral provision, which most micro and small businesses do not possess. There is still room for expanding the microfinance sector in Ghana, since the commercial banking system, which has about 29 major banks, reaches only about 5% households and captures just about 40% of money supply. The third challenge is inadequate enforcement of the business rules and regulations. In terms of the regulatory framework, microfinance institutions are currently regulated under the Act 774. Due to the broad categorization of the businesses affected under the law, the necessary attention to be given to the implementation of the business rules and regulations for the microfinance sector is often underrated and inadequate on the side of practitioners, that is, those who are operating the microfinance business itself. The fourth is the absence of a formal MFI coordinating institution for all micro groups and finance institutions in the country. Currently, the absence of a formal institution mandated to coordinate activities of all umbrella associations such as the GAMFIN, the Cooperative Council, and others, all associated with microfinance, is a major gap. There is an urgent need for the establishment of such an institution that will be responsible for coordinating all activities associated with microfinance. There is also no existing national forum that provides a platform for dialogue among stakeholders on policy, practicing, and regulatory issues of the sector. GAMFIN, one of the key umbrella bodies for microfinance in the country, still needs to be strengthened. Their membership does not include all practitioners and service providers, resulting in the fragmentation and inadequate collaboration among ministries, departments, and agencies. Now, major players in the industry. Mr. Chairman, microfinance can be as informal and local as money lending, or a loose confederation of business people who lend to those who are in the community. Some influential global leaders in the microfinance industry include KIBA, which is an international organization that lends money via the internet. KIBA has a branch even in Ghana. Akion is also another microfinance bank, which is the largest microfinance bank in Nigeria. Over time, it has helped to build 63 microfinance institutions in 31 countries on 4 continents that are reaching millions of clients. The third is the ROSCA system, which is a rotating savings and credit association, a group of individuals who agree to meet for a defined period in order to save and borrow together. They are prevalent in both developed and developing countries. Some strong microfinance institutions also float bonds to source funding as a means to long-term funding. Others raise funds through acceptance of fixed deposits from individuals and other corporate clients. Some notable lessons and recommendations. Mr. Chairman, microfinance or microcredits has now become a common business system that has been imputed to mean everything to everybody. The term microfinance can mean agricultural credit, or rural credit, or cooperative credit, or consumer credit, or credit from money lenders. A broader classification can be placed in the following aspects. 1, traditional informal microfinance within the informal market. 2, microfinance based on traditional informal groups such as the SUSU. 3, the ROSCA system. 4,
activity-based microfinance through conventional or specialized banks such as agricultural credit, handicraft credit, non-traditional export credit, etc. 5, the rural finance credit through rural banks. 6, consumer microfinance or trade credit. 6, bank NGO partnering-based microcredit. And lastly, financial non-governmental organization credit. This categorization can help governments know how many low-income borrowers access the product, their gender, growth over a period, loans disbursed, repayment rates, and somehow also defines the type of microfinance institutions that exist in all such emerging economies. Some of the lessons learned from microfinance and microcredit operations in emerging economies are mainly drawn from the experience of Grameen Bank, as earlier mentioned, which informed the world of the effect of structured microfinance delivery on low-income groups and economic growth, even though they also had their challenges. Government and policymakers will therefore need to recognize some of the features and use them to develop additional policies and systems, such as creating an umbrella microfinance bank owned by public-private bodies to set the standards and best practices for the industry, and to ensure good effect on respective economies and eventually lift up the poor in business to the level of sustenance and growth. In the light of the submissions made in this address, I wish to recommend the following for further consideration. Namely, microfinance should be promoted as a human right. 2, its mission is to assist low-income and poor families, sole enterprises help themselves to overcome poverty. It should not be based on any collateral or legally enforceable contracts, but rather on building trust and close monitoring. It should be offered to create self-employment through income-generating activities, housing for the poor as opposed to consumption. It should continue to reduce the basic methodology of conventional banking and adopt its own methodology. At first, I couched it as it should continue to reject the basic methodology of conventional banking. Then I remembered I'm a banker. So I said it should continue to reduce the basic methodology of conventional banking and adopt its own methodology. This work will be enhanced if the personal identification system prevailing in most African countries is further developed to be robust and resident in strong institutions. Borrowers must ideally join groups of borrowers. Loans can be received in a continuous sequence. New loans become available to previous borrowers of loans repaid. All loans to be repaid in weekly or monthly installments. The product should come with both obligatory and voluntary savings programs for the borrowers. Generally, loans for lending are to be contracted through non-profit organizations or through institutions owned primarily by the borrowers. If it is done through for-profit institutions not owned by the borrowers, efforts should be made to keep the interest rate at a level which is close to a level commensurate with sustainability of the programs, rather than bringing attractive returns to investors. The thumb rule is always to keep the interest rate as close to the market rate prevailing in the commercial banking sector as possible, without sacrificing sustainability. In fixing the interest rate, market interest rate is taken as the reference rate rather than the money lender's rate. Reaching the poor is its non-negotiable mission. Reaching sustainability is a directional goal. It must reach sustainability as soon as possible so that it can expand its outreach without fund constraints.
An umbrella microfinance bank should be at best established now in Ghana. Such a bank should give high priority to building capital for its clients. This can be promoted through formation of groups and centers, developing leadership quality through formation of groups and center leaders, electing board members when the institution is owned by the borrowers. Such groups give special emphasis on the formation of human capital and concern for protecting the environment. It monitors children's education, provides scholarships and student loans for higher education. For formation of human capital, it makes efforts to bring technologies such as availability of mobile phones, solar power, and provision of mechanical power to replace manual power in industry. Some sort of deposit insurance scheme could be attached to the licensing process of microfinance institutions. Conclusion and main recommendation. Mr. Chairman, Honorable Audience, to conclude, I believe Ghana can rise above the challenges raised and establish a microfinance IPES bank to help lift the country from this poverty syndrome. The microfinance IPES bank can be set up along the lines of the ARB IPES bank, with all umbrella microfinance bodies having a stake in its ownership together with the Ghana government. It should be best positioned as a public-private venture, also involving other interested bodies and individual collaborators in the public and private sectors. Such a bank can do the following. 1. Put in place the best practices, systems and standards that will accommodate the interests of its clients and the economy. Serve as the standard for the multiple microfinance enterprises that are springing up everywhere in Ghana. Serve as the institution that will help define the informal sector and also promote policies and objectives for the large informal sector in the country. Promote capacity building activities for the numerous small microfinance business that are licensed by the central bank. Collaborate with the central bank and the Ministry of Finance and Economic Planning to effectively enforce the business rules and regulations for the microfinance sector within the Non-Bank Financial Institutions Act 2008, Act 774. Construct business startup profiles for the different types of typical viable micro businesses prevalent in the economy now to guide individuals, technicians, graduates, etc. to initiate their own businesses. Such a bank can also conduct continuous research into the design of new products and services for the industry. The premise for policymakers in Ghana and Africa is that the poor and low-income persons have skills which remain unutilized or underutilized. I therefore share in the belief recently espoused by Grameen that poverty is not created by the poor, it is created by the institutions and policies which surround them. In order to eliminate poverty, we need to make appropriate changes in the policies and institutions we have, and also create new ones. Charity is not an answer to poverty. It only helps poverty to continue, and it creates dependency and takes away the individual's initiative to break through the wall of poverty. Unleashing of energy and creativity in each human being is the answer to poverty, and of course, through microfinance. I'll finally end by also extending my felicitations on the Institute's achievement of its 50 years in service. Thank you for your attention.
Thank you very much, Mrs. Sakwa, for taking time to educate us on microfinance and its impact on the economy. We are grateful. On the program, we have question time. So we'll allow a few questions from you. If you have any question, please put up your hand. We'll give you a microphone. Anybody has a question to the speaker? So I wish to invite the director of the institute and the Pro-VC to make the presentation. Let's welcome them.
I will read. It says, Anglogold Lectures on Business in Africa. Institute of African Studies, University of Ghana, Lagos. Anglogold Ashanti Ghana. To Mrs. Feliciakwa, in appreciation of your contribution to the fourth in the series of the annual Anglogold Ashanti Ghana Lectures on Business in Africa, delivered on October 16, 2013. Thank you very much. And since this is our 50th anniversary, we have to give you.
You know that when you finish teaching and you ask students to ask you a question, and nobody talks or raises their hand, it could mean one of two things. Either the lecture was so clear that, or that the lecture was absolutely over the head. Hopefully, everybody understood what she said. Because she was talking about micro stuff, right? Little things. And we are very grateful to Mrs. Akwa for making herself available to us to give us some insight into how microfinance systems work. It is very obvious that, you know, sometimes we, especially in this country, we tend to look at, you meet people and you ask them, well, what are you doing? It's, oh, I'm looking for money to start a business. And then you ask them, so how much do you need? So if I could get 10,000 Ghana cedis. I said, hey, you don't have anything, and you want to start from 10,000. There is some wisdom in taking one step at a time. I think this is part of the philosophy of microfinance. I know the case of one young lady who moved to Accra and didn't want to be dependent on relatives. So she went to one of the relatives and said, oh, I want to sell XY. Can you help me start? So the relative said, okay, as often as you pay back the small money, and I think it was those days, but right now we say maybe about 200 Ghana cedis. So she would take the money, go trade, and then within a certain specified period, bring that money back. But the agreement was that you were not just selling and bringing the money back, but when you come back, you tell us how much you were putting aside to build your own capital. And gradually this young lady built up some capital, so she stopped going for the loan. And there are individuals, and especially women, who have been able to move their families out of the grips of poverty through very little steps and efforts. I'm sure many of us know women who have sold cooked rice, yokogali, etc., to see their children through university. And once you see one child through school, through higher education, that obviously means that those children who are going to come out of that individual will not start from where he started. So we thank you very much, Mrs. Akwa, for these thoughts and the challenges. Academics are used to theorize. I'm not an economist, I'm a linguist. And I always lay down my credentials. I know a lot about nouns and verbs. I'm only a practitioner in the use of money. But there is a point you raised which I was just asking myself. Is it possible that the more a microfinance institution grows, the more it takes on the features of a conventional banking institution? Thank you, ladies and gentlemen, and thank you, Mrs.